Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Tony Seo, Head of Regulatory Strategy and Innovation with Nasdaq Anti-Financial Crime, to discuss markets and crypto assets regulation known as MiCA and the key implications for surveillance practitioners. Tony, it's great to see you as always. Welcome back to Trade Talks.
Thanks, Jill.
On Thursday, April 20th, the EU Parliament voted to approve the markets and crypto assets regulation. Can you tell us what MiCA is?
Sure. So MiCA is a new harmonized EU framework for the regulation of crypto asset markets. It gives legal clarity for crypto assets not covered by existing EU rules. MiCA itself has a very broad scope and covers most of the asset lifecycle, such as custody, operations, trading platforms, exchange and transfer of crypto assets. It even goes as far as providing advice on crypto asset investments, as well as portfolio management. MiCA also creates kind of like a few interesting subcategories of crypto assets. So they have categorized them into asset reference tokens, which have a stable value against a reference asset. So something like tokenized gold would be an example of this. They've created what they call electronic money tokens, which are similar to asset reference tokens, but the reference is an official currency. So something like a US dollar stable coin would be an example of that. The third category covers kind of pretty much all the other crypto assets, except there are some special provisions for utility tokens as well. Interestingly, it doesn't cover NFTs, and the focus of the current round of MiCA is really very much on CeFi, which is centralized finance, over DeFi. There are some discussions already about future expansions to MiCA to cover DeFi, but I think right now the focus on CeFi is very appropriate. The vast majority of actual kind of transaction activity, especially retail, happens on these CeFi marketplaces. I believe approximately 90% of transactions happening at the moment happen on CeFi style markets. So MiCA enters into force next month, but in practicality, we won't see most of the provisions apply until about 2024.
What does MiCA mean for the broader capital markets and digital assets ecosystem?
So this is like a landmark piece of regulation. It provides much greater clarity for what crypto assets providers need to do. If you look at FTX and that whole debacle, a lot of the problems stemmed around the lack of fundamental governance and controls. MiCA makes it clear that CAS, or crypto asset service providers, need to perform these fundamental tasks such as managing conflict of interest, having proper disclosure rules in place, and complying with anti-money laundering rules. MiCA also adds requirements for issuers of new crypto assets around reporting and approvals with relevant EU authorities. Interestingly, it also kind of places some restrictions, the size of those kind of asset reference tokens and electronic money tokens that I mentioned before. In general, MiCA takes a lot of kind of good standards and requirements that exist in traditional marketplaces and kind of clarifies and applies them into the digital asset space.
What are the key implications for surveillance practitioners?
So for all CAS and crystal asset market participants, it's going to be clearer, but it's going to be fairly stringent in terms of surveillance requirements under MiCA. There are 5 articles specifically which cover market abuse. That's articles 76 to 80. The first few articles really focus on disclosure of inside information, inside dealing. So there were two kind of a recent high-profile case by the SEC with some former Coinbase employees to show that's also kind of a focus here in the US as well. And it also shows that the nature of crypto assets does not mean that they are immune to insider trading. Article 80 really focuses on market manipulation. It has wording about placing misleading orders and transactions, price manipulation, releasing fake or misleading information, securing dominant position over supply and demand, and disrupting the proper function of a crypto market platform. It's actually all very in line with the existing market abuse regulations that apply in traditional markets. So we actually mapped out our existing detection algorithms, and a large portion directly apply in this new framework. All in all, I think it's very much a good thing. Provides clarity where clarity had been lacking before, and it puts in place clear standards for crypto markets to comply with.
And finally, Tony, of course, the key question is, how do you think other regions will look to regulate crypto?
So I feel MiCA, along with the recent statements from the SEC and CTC, will really set the tone for crypto regulation globally. This is that crypto assets and the digital asset industry as a whole needs to meet the same standards in such things as governance, transparency, and prevention of market abuse that applies to traditional marketplaces. For market abuse more specifically, it's going to be very similar to the impact of MAR when that came in the EU as well. The additional detail provided by the MiCA rules and the practical steps in their eventual application are going to be watched very tightly by, I would say, almost every other jurisdiction in the world as they're writing their own crypto regulations right now.
All right, Tony, appreciate the insight and update. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.